we'll just briefly introduce ourselves. So I'm Amelia Armour. I'm a partner at Amadeus Capital Partners, and we're a deep tech investor, and we're focused on seed and early Series A companies, mainly in the UK, but also outside of the UK. And our particular investment focuses are on machine learning and AI, cybersecurity, medtech, digital health, quantum computing and novel materials. And my particular focus area is really AI and machine learning and also the novel materials investments. So Simon Thomas from Paragraph is talking this afternoon, and that's one of our investments. But I'll hand over to Mick.
Thanks very much. So hi everyone, my name is Mick. I'm a founder at Lunar Ventures. Lunar is a European fund, a 40 million fund, pre-seed and seed, investing up to 1 million in founders building new algorithms. So algorithms creating value in cloud, in material discovery, in drug discovery, or across optimization, simulation. So any software, computer science or software engineering opportunity falls into that category. Primarily we operate at pre-seed, so that's pre-revenues. And we have about 20 investments to date spread across Europe.
Brilliant, thank you.
Thanks, Liliya. Hi, everyone. I'm Avantika. I'm the Vice President of UK and Europe for a group called Type 1 Ventures. We were originally founded in Los Angeles, but we opened our UK office 6 months ago, and really happy to be in this part of the world as well. Our primary investment thesis, I guess, we're very mission-led, and I'm going to give you the mission-led version first before going into the practicality of it. We're really focused on the technologies that are going to change the way humans live in civilization 20 to 50 years from now, and even beyond that, 100 years from now. Technologies that will be the infrastructure layer that Francesco talked about yesterday, and will be the basis of what we build upon them moving forward. From a practical standpoint, we look at a lot of space-based technologies because we see the next iteration of humanity being in space exploration and space travel. And then more on Earth, we look at robotics, deep science and data science models that will be the basis of where we go, and also in autonomy and how that's going to change how we as humans operate. We work across seed and Series A, but we are very keen to build the later stage fund as well and support our founders moving into Series B and beyond.
That's great, thank you. Liliya.
I'm Liliya Chechel. I'm investment manager with Shell Ventures, corporate venture unit of Shell Group. We invest in startups that develop technologies that help accelerate energy transition and mobility transformation. We are largely stage agnostic, so we invest all the way from pre-seed and to pre-IPO. We are a global team. We have hubs in San Francisco, Houston, Boston, London, Netherlands, China, India. We have around 100 companies in our portfolio. We also invest in funds. Speaking of verticals, we may be less fancy than Avantika's fund. So it's things like renewable power, battery technology, storage, connected mobility, ride sharing, car sharing, and then hydrogen technologies, etc. So everything that has to do with energy, basically.
That's great, thank you. Sort of just to set the scene for what the investing world is looking like at the moment in terms of numbers. In 2020, there was about 47 billion that went into European VC-backed companies, and that skyrocketed in 2021. So there was 106 billion that went into the European VC market. And we're seeing that actually the start of this year, it was still high. It was 54 billion in the first half of this year. But that will be because of a bit of a lag from last year, because there's generally about 6 months maybe between agreeing a deal to then actually it being announced. And now, with the numbers coming through for Q3, we're starting to see the retraction in the market. So the latest numbers for Q3 is that it's fallen to 16 billion, which is nearly a 50% year-on-year decrease in the Q3 quarter. And I think it's interesting for us to explore how that is actually impacting us on the ground. So I don't know, if I start with you, Liliya, how has your direct investing sort of changed this year over previous years?
I guess given we are a corporate venturing unit, we pursue basically group strategy in power in progress, and hence at a high level it didn't really. We still originate deals in in technologies that are of interest to Shell. Now, practically speaking, obviously we invest in a syndicate of other investors, and very often these are financial investors. And the market changed between last year and this year, and so obviously, as you all know, we see flat rounds, we see down rounds, we see companies not being able to raise. The exorbitant valuation of last year, they were not occasionally justified. Some of the companies that actually were cited between yesterday and today. In some deep tech areas, we see them, not being able to raise for almost like 9 months to close the round. So that makes us a bit more cautious, because we need to be cognizant of the fact that there will need to be follow-on capital, and hence, if we invest in a consortium of 5 investors and financial investors will be, a bit cautious to deploy, obviously we want the company to pursue its goals and be well capitalized. So yeah, we take it into advantage, and we are maybe a bit more careful this year in terms of picking the companies and paying attention to pick the ones who will be able to survive through the crisis.
Yeah, it's interesting. I don't know if you've heard it, that the flat round is now the new up round. So
exactly.
you can get away.
Exactly, you're lucky if you get one.
Yeah, if you get away at your last round price, then
exactly.
you're doing well. Yeah. Avantika, how are you finding it?
Yeah, of course. I think very similar. We're seeing a lot of our companies where last year they were able to raise larger rounds 2 months, 3 months, and people fighting over getting into those rounds. This year we've seen a lot of extension on those times. So moving from 3 months to 6 months to close rounds. Still able to fill the round, still able to get away with a slight valuation uplift in a lot of cases. But it's interesting to see that we're seeing hesitation on the European market for the valuations. We're not seeing as much hesitation in the US investor pool for the increased valuation still progressing in 2022.
Oh, okay, interesting. And is that US investors coming into Europe that you've seen?
Both ways. Okay. So some of our companies, we've got 2 existing portfolio companies who've been raising rounds, one US based, one Europe based. Mm-hmm. And it's interesting to see the ones who've kind of focused on European investors have had a lot more pushback on the valuation, and the ones that are focused on US investors haven't had as many questions. And it's just that different view, I guess, of risk and the risk appetite right now in the market that's we're seeing in our portfolio and in the new deals we're doing as well.
That's really interesting, because obviously the data is showing that the US investors have sort of gone home and they are less active in the market. But I don't think the valuations in Europe went up nearly as high as they did in the US. So I wonder if Europe is still seen as cheap versus the US. Do you think that's coming through a bit?
I would say so, and I think as well it's because perhaps in the industries that we play in, we're seeing less competition for deals in Europe. Whereas in the US, because there's a larger pool of investors doing the really deep tech, hardware-heavy investment, the valuations have been pushed up because of that competition.
Right.
Whereas in Europe, we're still able to get access to incredible deals at lower prices. And I hate to say it that way, but it is the reality of it. For us, the primary reason coming to Europe was so that we can access the great tech and less so about the valuation. But it's a bonus.
Yeah. How have you found it, Mick, in your because you're investing at the sort of earlier stages, I think, of all of us. So it'd be interesting to see how it's impacting the sort of the startup community.
Yeah, absolutely. I think so. Just to second the comments, we're also seeing like a flight to quality, and we're seeing like a bifurcated market in that regards. Both new companies and some portfolio companies are struggling with raises, but the very best of the companies that we see, both new and existing, I think are finding it as easy or even easier to raise. Those are still crowded and sometimes highly priced and overpriced rounds because with, let's say, scarcity of very good deals, the investor side and the capital pools are still there, and they're seeking, I think, good opportunities, and those are even more rare than before. I think in terms of valuations, we're doing pre-seed in Europe. In that regard, we haven't seen prices inflate that much. We haven't seen the effect of the US capital kind of overflow into Europe as much at those stages. It's, I think, quite rare to find US investors operating pre-revenues in Europe, and in that regard, yes, prices have gone from 3 to 5 to 7, but not from 7 to 20 in that regard. It's not coming back that much. Again, whether you're doing, I don't know, deep tech is a very broad space. If you're doing hardware, or robotics, or blockchain, if it's, Central East Europe or London, the prices do vary quite a lot. And so we have seen fintech in London go quite a lot, and then, detract as well. But we've also seen material discovery, we've seen drug discovery and other more fundamentally driven technologies that I think have not inflated as much, and I think are contracting as much either.
Right, that's interesting. But are you seeing at the earlier stages that the founders are still as active as they ever were? Because I sort of get the impression that founders don't worry about the macroeconomic cycle. They're just, we've got a great discovery, let's spin it out. And how do you find it in terms of your deal flow?
They absolutely do. I think in our portfolio we had this panic moment when founders were kind of going through the US Twitter stream and kind of getting a bit mortified that the sky is falling. The sky is not necessarily falling, but we have seen a bit more pragmatism, I think, from founders, both in our portfolio and outside. In that regard, I think founders were a bit more eager to get good deals and optimize for price, and optimize maybe even, let's say, at the cost of longer raises, optimize for partners. And now I think it's much more pragmatism. It's if you have a deal on the table, you close it now. You don't seek out a better price. You don't necessarily optimize for partner. If it's Q2 or 3 this year, if you have a deal on the table, who knows if that deal will be the Q1 next year. So in that regard, we do see a lot of pragmatism from founders.
Yeah, so good advice for founders, bird in the hand versus two in the bush. If you've got a great deal, just take it. Or if you've got any deal, just take it. Yeah. I think I certainly saw that, especially with US investors coming into the market last year. I would speak to founders and they'd say, oh, we've just opened up the data room. And I'd be like, oh, that's great. And they say, oh, but we've already got a term sheet from a US investor. I was like, well, that's brilliant. You should take that, because we cannot operate at the speed that a US investor works at. So that dynamic has certainly changed in the market. Yeah. But I wonder, Avantika, how do you see it on the deep tech side in terms of how the current macroeconomics might affect deep tech companies? Because there's certainly, often this long R&D phase which you need funding through. And if there's a worry about where that funding will come from, how do you think that will affect the deep tech market?
Sure. I think we're advising our founders right now to keep running hard. We are continuing to do new investments, but we're very focused on supporting those founders to hit those milestones. I think primarily because we're recognizing if everyone else is pulling back from fresh R&D, if we can encourage our founders to take the risks and do the development part of their research that has been going on for years, then we'll be able to accelerate path to market before anyone else. But we're also using it as a chance to access talent that has become available because of others pulling back, access grants, and I think part of that as well is the grant system across the US and Europe becoming available to all of our companies by cross collaboration, I guess, into the UK as well as across to the US. But I don't think it's affecting the hubris of the deep tech founder as much. I think they're still very gung-ho on pushing forward with that cutting edge R&D, regardless of the market dynamics right now, and we're encouraging them to do that.
That's great. And that's interesting that you say about the grant funding, so that can come in alongside the equity, provide non-dilutive funding and help extend the runway.
Exactly, and we've seen that for many years that's such a promising aspect of what we can access in the UK and Europe. But we're seeing that more and more now, where there's a lot of, I hate using the word nationalistic, but there's a lot of nationalistic grants available for companies depending on where they're based, primarily because there's a drive to build internal talent and internal R&D. And so we're taking advantage of that.
Yeah, that's interesting. I wonder, maybe all of you want to comment, whether you have your companies have accessed EIC funding, so European grant funding, which unfortunately our UK companies can't get access to the equity part of that at the moment. But have you had companies that have successfully raised EIC or money?
I think so. We have large portfolio, but not the deals I worked on. But many of our portfolio companies regularly receive funds from government, various grants, and obviously with energy transition. So.
Yeah. Mick, I was wondering if investors are more focused on supporting their existing portfolio because there is this retraction of other investors, how do you think that will fare for sort of new investments that are coming through?
Yeah, I think we're seeing a lot of our portfolio companies require a bit more hands-on support, especially with newer rounds, especially as they, let's say, would struggle a bit more to raise funding from better class of investors. So crafting the story, getting metrics, let's say, to an acceptable rate requires a lot of bandwidth from us. At the same time, we're seeing that other investors don't necessarily have the ability all the time. And sometimes those folks have later stage portfolio where they do have real fires to put out in the later stage firms, right? So we're a younger firm with a younger portfolio. Our portfolio founders are in the very, let's say, early phase of their journey. And so the work that we put in is really just getting them through product market fit challenges, commercializing technology and getting that out into the market. I think it also takes some focus away from doing other work in the ecosystem. And I think it's something that we were more focused on, let's say, in catalyzing ecosystem. We're a Berlin-rooted fund, so we're doing a lot of that work. I think it also connects a bit to the post-COVID sentiment, which is about being on the ground somewhere, is I think different now than it was 3 years ago. And I think catalyzing ecosystems in that regard for a fund, I think is very valuable long term, but in the immediate time there's maybe more pressing issues, right? So that's maybe some shift of focus from us as well.
Thank you. And Liliya, I wonder what you think could be done to really bolster the deep tech scene in Europe and create more scale-up companies. Certainly the data shows that funding round sizes for early stage deep tech companies between Europe and the US are similar. But by the time you get to the later stages, the US companies are raising 3 times the amount that our European companies are raising. What more can be done in Europe so we get more unicorns in Europe, do you think?
Very good question. And indeed, we do see that as well. The disparity in valuations and ability to attract funds between Europe and US. And at least in the areas of deep tech that we look into, which is battery technologies, autonomous driving, fusion as well, hydrogen, green hydrogen production. I guess, these are areas that are within VC asset class are the highest risk and highest return potentially. And so, it requires some of these areas like fusion or quantum computing. They have, they won't be commercial before 10 to 15 or maybe 20 years. So it does require patient capital. So I think to speed up the progress, maybe there needs to be an approach to investing whereby the syndicate is a syndicate of sophisticated investors who not only understand the tech, but also who have firepower. So corporate investors or big, offshoots of big tech companies like Breakthrough Energy Ventures, but also lower carbon. And I'm talking climate tech space, for instance. So patient capital, but also sophisticated investors who do have resources to understand the tech, but also to advise the companies and to help them raise and to help them, have a successful long-term journey.
That's interesting. And do you think there's more that could be done within Europe around regulation to support companies? Do you think it is the right regulatory environment that we have here to help companies grow?
Well, I guess it depends really on the sector we are talking about, but I think we are behind US in that sense, and I think loads could be done in a regulatory environment to sort of like facilitate funds flow within Europe, but also internationally, and as well as attract capital actually from US, from China, from India. Yeah.
And Avantika, you have investments in the US and in Europe. You've mentioned the difference in pricing in Europe. Do you think there are other advantages for deep tech companies being based in Europe over the US?
Yeah, absolutely. I think I'll give a specific example for the UK, but I think it also applies to the rest of Europe. We've seen a lot of, because of the visa situation, so we talked about this yesterday around bringing talent into the UK and having access to visas. One of our companies has been able to hire talent from basically every corner of the world because of the visa system in the UK, where they can employ those people from lots of South America. They've had individuals from Sub-Sahara who want to then move to the UK and bring their engineering capabilities. And because of the visa system that works much better in the UK, I have to say, than the US, they've been able to do that, find the best globally and bring them here. And then in addition to that, I think as well, coming back to the price point on a different angle, they've been able to access world-leading facilities in the UK and in Europe, which in the US are 3, 4, 5 times the price for the exact same facilities, expertise, and research support, where here they're able to get that faster because there's less of a line for it and cheaper.
Yeah, that's brilliant. It's interesting you talk about access to resources. I'm based in Cambridge in the UK, and there's a big complaint there about lack of lab space.
Yeah.
You know, and when you speak to people in Cambridge, Massachusetts, they just think it's ridiculous. You know, just build more lab space. And I wonder if you can comment on that, Mick, because you're based in Berlin, about the sort of ecosystem, because, you know, Cambridge is a great ecosystem, you know, which I can talk about, but I wonder, how do you find it in Berlin for that type of ecosystem and provision of sort of infrastructure?
So Germany has a lot of public universities, and I think that are fantastic. I think Berlin has a lot of leading universities, Munich, as well as other major hubs in Germany, and I think that those are very eager to collaborate, but sadly not very sophisticated in the. And I think this is also a UK challenge as well, and it's a challenge across Europe, which is the universities are not that set for supporting venture and not that sophisticated in what venture success stories are and look like. And so while the resources are there, the talent is there, the lab space, the instrumentation and so forth are there, I think that it's a bit more of an education or cultural or even DNA shift that's still required. I've worked in innovation many years in a startup ecosystem in Israel, and this is something that's a decade-long journey that took the Israeli ecosystem from even the 70s or even earlier until the point where it is now. And I think that this is something that Germany and other European nations are still, I think, at the very early steps of, so still a way to go.
Yeah, I think that's an interesting point. In the UK, I think 85% of spin-outs comes from 6 universities. You know, it's really concentrated. And so hopefully with funds such as Northern Gritstone, which are, you know, focused on Sheffield and Manchester and Leeds, we get more coming out of other universities, because it feels like we're missing quite a lot of the deep tech that could be coming through. Yeah. I don't know, Avantika, do you have any views on that, on how you see it, those earlier stages?
Yeah, absolutely. I'll give one anecdote there, primarily relating to Northern Gritstone and the concept of innovation in the north. So for us in the space tech industry in the UK, there's a statistic that basically the University of Leicester has had a hand in every satellite that's ever gone up in space. But we are about to have our first UK-based launch because we've just relied on others to do it. And at the same time, there's so much innovation going on in those universities, but those investors who are Golden Triangle-based, London-based, aren't as willing to make the time to go up and look and make those relationships work over the distance, and then kind of understand the difference in the way some of those businesses might be viewing how they commercialize, because they're much more manufacturing heavy, perhaps in those regions. And so for us, we had a conversation with Marion from Northern Gritstone just a few days ago. We are trying to move beyond Golden Triangle, beyond London, and see what space tech and deep tech might be available in those universities, and how we could support, not just from a funding point of view, but also from a commercialization point of view, finding partners for those startups in the US, even if we can't participate, how we might be able to help them get more attention and build more of a story around universities that don't get the time from London.
Yeah, that's interesting. I think, I'm based in Cambridge, so I'm a bit biased, but I think the tech transfer team in Cambridge is, it's a gold standard in the UK. They're just absolutely amazing at Cambridge Enterprise. Yeah. And I wonder, do you think that is part of the problem? It's just the incentivization to help professors get tech out, and how you manage the professor's time between the spin out and the department.
Yeah, so my previous life, I have a background in technology transfer and commercialization at universities, and working with universities both from an internal point of view and a global corporate point of view. And this was Australia and New Zealand, which I think is even a further step behind where the UK is and some of the European universities are. But it very much is that balance of, if you're going to focus a professor out of the lab and commercializing outwards, then what's the best structure to help them continue to do their research and do breakthrough technology development at lab scale, while giving them the support to commercialize. And it might not be the same person doing both of those roles. And I think that's quite crucial to recognize. And I think it's a matter of talent, of how do we, because I saw this so much in Australia specifically, how do we bring talent that's capable of international commercialization into those really early stage startups that can interface with a professor, interface with someone who's an expert in their field, and then make it available to others.
Liliya, I wonder if you see it, do you get down to the level of looking at interesting technologies which could be of interest to Shell, at the university level? Do you go that deep?
No, this is a very good point. And we do have a number of deep tech investments whereby the anchor founder is a scientist, and very often with strong university links, or even a professor at the university at the same time. Now, like Avantika mentioned, it requires resources to establish those relationships, and it's about visits, it's about building connections with universities, and being also actually close to them physically. So we should be probably doing more of that than we do. But Shell obviously is a big group, so we have incubator in the US, we have incubator in India, so they work much closer with these early stage startups, and they sort of like help them accelerate and get to the pilot stage, help them with financing. But yeah, I guess we do appreciate this is this is a very interesting spot, and we potentially should be doing more of it. But we are more concentrating our efforts more on Series A and forward.
Right, that's interesting. I wonder if we can move on in just the last 5 minutes, talk about maybe the funding of the venture capital fund. So we just talk from a sort of slightly looking at the LPs, because in the UK and Europe, compared to the US, there's a big difference in how much funding to VCs comes from pension funds. So US funds, 72% of the backing is from pension funds. This compares to 10% in the UK and Europe. Now, we know it's a big issue in the UK, and it's being worked on, and one of the things from the mini budget will hopefully help that. But I wonder what you all see as the outlook for fundraising for the VCs in the next few years. I don't know, Mick, if you have a comment.
Yeah, I think there's a few trends that are interesting. In Europe, I think there's a growing class of funds, more sophisticated, more specialized funds that we are seeing are willing to take more risks on more specialized teams. In that regard, Lunar is an emerging manager, meaning we all come from building technology, being operators in startups before. And I think that that's maybe one of our insights, is that's what's really needed to become a good picker, a good investor, a good value-add investor in deep tech. You need a lot of understanding, subject matter understanding that's often very, very, very deep. And so, let's say the tradition of venture capital in Europe is, in my perception, I think, across many nations, is very generalist. And that doesn't apply well to pre-revenue. So spreadsheet investing works fine for some kinds of businesses, but pre-revenue for very deep subject matters requires subject matter experts on the investor side, which is where I think emerging teams can do well. I think that scientists moving to the investment side can do very well. And I think that we'll see more investors on the LP side willing to take those risks. But at the same time, we do appreciate that there's going to be, from family office backgrounds, from other, let's say, more traditional investor backgrounds, there's going to be some more hesitation to back new teams and to take that risk, especially if we are to see a recession, we are to see some kind of slowdown in the market.
Yeah, this is quite a frustrating point for emerging fund managers, because you don't have the track record to show your LPs, and you can get caught in a bit of a vicious circle if you can't raise the money to them sort of prove your performance. And because VC investing is so long, it can take a while before you get the track record. So it's great that you've been able to raise.
Yeah, I think it's a bootstrapping exercise, and it's an entrepreneurial bootstrapping exercise. Ultimately, I think that what makes you an investor is investing. In that regard, it doesn't necessarily matter if you manage 1 million or 10 million or 100 million. The ability to find investment opportunities, support them, give them value, and often, even in a recession, capital is more of a commodity than value in a recession. So finding a good team, that team can get funded, but doesn't necessarily have the support that they need from the investor side. In that regard, even emerging managers, even with a very, very small pocket of cash, can support, I think, winning teams. So it's not so much about the AUM.
Right, it's the quality of the team. Yeah, that's cool. Avantika, do you worry about your future funds and how you're going to raise them?
Sure. So I think from our perspective, because we've got such a narrow thesis and narrow mandate, we've found a lot of engagement with strategic family offices who understand the problem that we're trying to solve from more holistic space travel, space exploration, civilization point of view. So we've been very lucky perhaps in that regard, and we've managed to find a global pool of family offices that are interested in that space. We're starting to see the transition now of institutional investors who are recognizing the mission, recognizing where technology is moving to in terms of specifically the space industry, but also broader and deep tech. And we're starting to see that in Europe as well, where those institutions, as sophisticated investors, are willing to take a bit more of a risk on niche managers. So I think we're in a comfortable position at the moment. As we move towards our growth fund, I think we'll have a similar issue with others raising large funds. The market depends on where it goes next year. But for now, we're comfortable.
Great, that's really good. Because Shell is a bit different because you're
perspective.
So you've got your balance sheet, so you're sort of okay, but you're also an investor in funds, so that
we are
LP.
investor in some 10 to 20 funds, so I think the way we would look at it is to the extent fund 1, fund 2, the fund that we invested performed well, and we established good relationship with the team, and we derived some good value, maybe also deal pipeline or whatever was strategic rationale at the time of investment. We would be interested to come in for fund 2 and fund 3. But I guess the way I would see it from an LP perspective, it's very similar to a startup. If the fund performed well, and they manage the crisis, they deploy wisely, they take a bit of time during times like this, and they pick wisely as well, like Mick mentioned. So we would definitely help them and participate to the extent it still fits our strategy. So that's from LP perspective.
Yeah, that's helpful. Thank you. So maybe if we just finish, maybe there's just one word on the most exciting sector you see at the moment, or the type of companies that you're looking at. Mick, do you want to say what's your big prediction?
Yeah, we've heard Rand pitch his company Zama yesterday. We are very, very bullish on privacy and privacy-enhancing technologies, and I think that this is still barely the tip of the iceberg. But in general, I think that machine learning and algorithms are just scratching the surface of what they can do, and we see that in many fields. We're looking at computer bio and many other fields as well.
Brilliant. Avantika, what do you think?
Well, I have to say space. Yeah. But if I was to be specific, I would say it's space infrastructure. So setting up the infrastructure of space that will enable the economy to be built around the Earth orbit as well as Lunar, and then eventually looking to Mars as well.
Exciting stuff. That's great. Thank you. And Liliya, what do you think for
I would say fusion. Nuclear fusion.
That's your long-term vision.
Hopefully 10 to 15 years, and basically recreate a source of endless, clean, dense energy on Earth.
Brilliant. Thank you very much. It was a great panel. Thank you very much. Thank you.